Welcome back to Explain the Charts, everyone. Today, August 10th, 2025, we're diving deep into the fascinating world of USDJPY, a pair that has certainly been making headlines. Starting with the news, we're seeing reports that Fed Governor Waller is emerging as a top candidate for a significant role, which could signal a more hawkish stance from the Federal Reserve moving forward. This perception alone can bolster the US dollar, creating upward pressure on USDJPY. Adding to that, Bank of America recently revised its JPY outlook, citing US labor data and Japanese politics as key drivers. While details are scarce, strong US labor data generally supports a stronger dollar, and any political instability in Japan tends to weaken the yen. Just yesterday, August 8th, the USD-JPY exchange rate rose to 147.6600, indicating a 0.59% increase from the previous session. Overall, the Japanese yen has weakened by 1.07% over the past month, which translates directly to strength in the USD-JPY pair. Now, let's turn our attention to the daily chart to see how these fundamentals are reflected in the price action. Looking at the broader trend since March 2024, USD-JPY has generally been on an upward trajectory, printing higher highs and higher lows, despite some significant pullbacks. We can observe a major rally towards the 160 level in late April 2024, followed by a sharp correction, which often happens after such rapid moves. Price then found support and gradually ascended again, indicating underlying bullish strength. Fast forward to July 2025, and we see another notable push, reaching a peak around 150.8. However, a significant reversal occurred right after this high. On August 1st, 2025, the pair saw a dramatic drop from an open of 150.805 to close at 147.36, losing over 2% in a single day. This type of sharp movement often suggests a major market event or perhaps even intervention by the Bank of Japan, given their historical sensitivity to a rapidly depreciating yen. The following days, specifically August 5th, saw the pair hit lows around 141.679 intraday, though it recovered to close at 145.79. This recent price action confirms the pullback toward trend support mentioned in the news, as bulls attempt to defend the July breakout levels around 146 to 147. The candles on August 6th and 8th show a rebound, with the price closing at 147.728 on August 8th, aligning perfectly with the latest news reports of an increase. This rebound from the 146 to 147 area suggests that this zone is now acting as a critical short-term support level. Zooming into the 1-hour chart, we can gain a clearer perspective on the recent price action that contributed to the daily volatility. Looking at the period from July 21st to July 24th, 2025, we observed a steady downtrend and consolidation. This hourly data confirms the building bearish pressure before the dramatic daily drop we just discussed. The price was struggling to hold higher levels, indicating weakening momentum despite the earlier daily uptrend. Now, let's switch to the 15-minute chart to analyze the most recent intraday movements, especially the recovery mentioned in the daily recap. We can see a distinct recovery from the lows on August 8th, starting around the 146.8 level and steadily climbing. The pair pushed through resistance levels that formed during the prior consolidation, demonstrating renewed buying interest. The final candles on August 8th show the price stabilizing around 147.7, confirming the upward momentum that contributed to the positive daily close. This level, around 147.7, appears to be a short-term consolidation zone after the recent rally. The increasing volume during these upward moves on August 8th suggests that the bullish sentiment has some conviction behind it. However, the sharp drop on August 7th, specifically between 1917 Universal Time Coordinated and 1932 Universal Time Coordinated, from 147.5 to 146.95, is a reminder of the volatility and quick reversals possible in this pair. For key price levels, the recent low around 146.0 to 146.5 on the daily chart serves as crucial short-term support. If this level holds, it could pave the way for a retest of higher resistance. On the upside, the 147.8 to 148.0 area, where the price is currently hovering, presents the immediate resistance. A clear break above 148.0 would suggest a strong continuation of the recent rebound. Beyond that, the previous high of 150.8 from late July acts as a significant long-term resistance and a psychological barrier. If price fails to hold 146.0 to 146.5, we might see a test of deeper support around 145.0, or even the 142.0 area where significant drops were seen earlier in the year. When considering whether to be bullish or bearish on USDJPY, several factors come into play. Reasons to be bullish include the potential for a more hawkish Fed, supported by strong U.S. labor data, which would strengthen the dollar. The recent defense of the 146 to 147 support area by buyers also reinforces a bullish outlook in the short term, indicating a potential bounce. Furthermore, any dovish signals or political uncertainties from Japan could further weaken the yen, pushing the pair higher. Conversely, reasons to be bearish stem primarily from the sharp and rapid depreciation seen in early August, suggesting strong selling pressure or potential intervention. If the Bank of Japan steps in more aggressively to counter yen weakness, this could trigger further downside. Also, if global risk sentiment deteriorates, the safe haven yen could see renewed demand, putting downward pressure on USDJPY. A sustained break below the 146.0 support would be a strong bearish signal for the short term. Traders should closely monitor U.S. economic data releases, particularly inflation and employment figures, as these directly impact Fed policy expectations. Similarly, any statements or actions from the Bank of Japan regarding their yield curve control or interest rate policy will be critical. Always remember to combine fundamental analysis with technical signals to confirm your trading decisions. Look for clear breakouts or breakdowns on higher volume for conviction, and always manage your risk effectively. The current consolidation around 147.7 is a pivotal point. A decisive move in either direction from here will likely set the next short-term trend. To recap the important price levels to watch. The immediate support is around 146.0 to 146.5. A breakdown below this level increases the likelihood of a test of 145.0 or even 142.0, with a 60% likelihood if bearish momentum resumes. The current resistance is at 147.8 to 148.0. A breakout above this could lead to a retest of the July high at 150.8, which we give a 55% likelihood if positive U.S. data and hawkish Fed talk continue. Things to look for moving forward include upcoming U.S. CPI and NFP reports and any subtle shifts in the Bank of Japan's rhetoric. Pay close attention to daily and weekly candle closes, as well as significant volume spikes, as these often precede larger moves. Thank you for joining Explain the Charts, and happy trading!